As we're wrapping up 2024, the Colorado Front Range real estate market is closing a year filled with dynamic shifts and promising developments. Hello, and happiest of holidays to you. I'm Marnie Kels, a 23-year licensed Colorado realtor. While the seasonal slowdown brought familiar patterns such as rising days on market, increasing seller concessions, and more price reductions, there's an optimistic narrative beneath the surface. This year highlighted the significant role of interest rates in shaping seller motivation as well as buyer sentiment. As I reflect on 2024, I see a tale of two markets. This year was marked by a unique duality. On one hand, we experienced the highest inventory levels in over a decade, surpassing the historically tight conditions of 2020 through 2022. On the other, buyer activity, as measured in showings, remains slightly elevated, indicating that while buyers may have been cautious, they remained engaged in the home buying process. Interest rates as a catalyst. Mortgage interest rates reached a two-decade high just over a year ago before fluctuating throughout the year and even hitting a two-year low in September. A modest half-point drop sparked notable buyer engagement, suggesting that many prospective buyers were at an emotional tipping point and ready to act if financing improved. Rates mostly hovered in the 6% range, dipping to the low fives for well-qualified borrowers. But this wasn't enough to ignite a frenzy, but it kept the buyers interested. The return to normalcy. After years of pandemic-driven market distortions, we saw a return to a more predictable seasonal behavior. Prices drifted lower through year-end, days on market climbed past 60 days, and seller concessions topped $8,000 per contract. And about half of all listings underwent price reductions. As of mid-December, over 3/4 of properties were selling below their original asking price. While this may seem challenging for some sellers, these conditions are seasonally expected and set the stage for a positive shift in the new year. The Colorado context and why 2025 looks bright. Colorado's economic diversity, steady population dynamics, and an influx of wealthier out-of-state buyers position the state as one of the most stable and attractive housing markets in the nation. While national housing policy, Federal Reserve actions, and global uncertainties will influence the broader economic and mortgage environment, the local fundamentals remain strong. As interest rates show signs of modest declining heading into the late 2025, more homeowners who've been locked in with super low interest rates are likely to enter the real estate market, increasing listing volume. Simultaneously, any meaningful rate reductions will spur sidelined buyers into action, setting the stage for vibrant market activity, increased activity, and moderate appreciation. After 2 years of low volume sales in 2023 and 2024, both about 20% lower than 2022 and 32.5% below 2021, as well as the lowest in 13 years, we anticipate an approximate 15% increase in home sales for 2025. This growth will be driven by two primary factors: the population growth and emotional adaptation. The regional population has grown by more than 18% over the last 13 years, and the low level of real estate activity relative to population size is unsustainable. The market is poised to release pent-up supply and demand. Nearly 3 years ago, mortgage interest rates began a steep climb. For almost 2 years, buyers and sellers mourn the loss of historically affordable mortgages. Many have now come to the terms with today's environment. As they move past mourning what once was, and we expect more people to buy and sell, as real estate remains a key part of life's evolution. Home value growth. While 2024 ended with the expected seasonal slide of home values, prices across the Front Range were up approximately 4% year over year. Analysis of the fundamentals suggests a 5 to 7% rate of appreciation over the course of 2025. Should interest rates decrease by half to 3/4 of a point, we could see a significant uptick in buyer activity. In that scenario, properties would move faster with fewer price reductions, lighter concessions, and possibly multiple offer conditions re-emerging. Prices could then rise substantially beyond the anticipated 5 to 7%. So what does this mean for current homeowners and buyers? If you held steady through 2024's slower pace, expect property's value to continue its modest upward trajectory in 2025. While this likely won't be a return to the double-digit appreciation of the pandemic years, sustainable growth is a healthy sign for long-term wealth building. If you're considering selling next year, keep an eye on the early year rate movements and buyer activity, and be prepared to make your property stand out for maximum competition to maximize its value. And for prospective buyers, the window of negotiating power that existed in late 2024 will tighten moving into early spring if buyer demand increases as expected. This coming spring, approximately 40% of homes will sell above asking price, and sellers will be less willing to negotiate terms like inspection repairs, rate buydowns, and other concessions. The good news for buyers is that they will be purchasing in a strong market of appreciation backed by substantial fundamentals. Again, I'm Marnie Kels, your community market leader and realtor extraordinaire. For more content about the Colorado real estate market, please like, subscribe, and share. And thanks for watching.